It's the first trading day of the week. Welcome to Business Incorporated, coming to you live from Lagos. I'm Chimezi Obi Iwago. Coming up on the show, United Nations report says an estimated $9 billion is the economic damage inflicted on Nigeria by the deadly insurgent group Boko Haram. Germany offers Egypt $500 million to support its economic program and medium-sized and small businesses. Plus, Libya's crude output drops after clashes forced two of the country's biggest oil ports to shut down. Now let's get started, and we're starting off with the markets. And here in Africa, Egypt's stock market was leading the pack at intraday, trading higher by 0.63%. And here in Nigeria, the market was marginally down at midday by 0.04%. as investors await more earnings report. And of course, the South African market was down 0.40%, trading at 51,502.37. The Nairobi Stock Exchange was down on Friday 0.49%. In the Middle East, the markets were mostly mixed at intraday, with Bauer Real Estate pulling down Qatar as the company went ex-dividend. Qatar's index slipped 0.92% at intraday as Bauer sank 7.8% to 36.60 reals, nearing technical support at 35.85 reals, the edge of an early February gap. The board recommended a cash dividend of 2.5 reals per share, up from the previous year's 2.2 reals. The Saudi Arabian index slipped 0.1% in the first half hour as Saudi electricity 0%. But at intraday, the index was trading down 0.18%. Dubai financial market was up 0.38%, and Abu Dhabi was trading up 0.86%. And markets in Europe were lower today as investors contemplated a rate rise by the U.S. Federal Reserve. The Pan-European Stock 600 was 0.45% lower, with basic resources stocks leading the losses on news of an expected slowing of growth in China. Banking stocks were also down by about 0.8% in mid-morning trade, with shares of the German lender Deutsche Bank at the bottom of the European benchmark, down by 6%. The bank is facing new legal action over foreign currency trading. Meanwhile, the lender has announced it will raise €8 billion to boost its capital position and has set new financial targets. By contrast, Standard Life and Aberdeen Asset Management were at top on the regional benchmark, up by 5% and 4% each. Standard Life has agreed to a $13.5 billion merger with Aberdeen. Our General Motors says it will sell its European operations to PSA Group, making the French company the second largest automaker in Europe. Shares of Peugeot Citroën were among the best performers, up by 2%. Meanwhile, the leaders of France, Germany, Italy and Spain are gathering in Versailles as they prepare for European summit amid rising political uncertainty across the bloc. In the U.S., the stock index futures pointed to a lower open today as traders focused on fresh economic data ahead of a probable interest rate hike in the U.S. this month. While market expectations for a March rate hike have skyrocketed to 81%. That's according to the CME Group's FedWatch tool, on the back of hawkish rhetoric and solid economic data. The Federal Open Market Committee meeting is scheduled for March 14 and 15. On the earnings front, Thor Industries, Analogic, Ascena Retail and Corn Ferry are all due to report after the market close. On the data front, Monday will see factory orders for January released at by 10 a.m. Eastern Time. In Asia, shares were mostly higher, dismissing earlier concerns about increased geopolitical risks in Asia after North Korea fired multiple ballistic missiles. Japan's Nikkei 225 finished down 0.46%, and the Kospi recovered from earlier losses to trade up 0.13%. Australia's ASX 200 closed up 0.3%, after January retail sales increased by 0.4% from the previous month. Mainland Chinese stocks were higher. The Shanghai Composite closed up 0.5%, and Shenzhen Composite added 1.18%. Hong Kong's Hang Seng Index was up 0.28% by mid-afternoon. And still in Asia, China, which has been the world's strongest economy since 2016, will lead global economic development for at least 30 years. And this is according to a report recently released by global accounting firm PricewaterhouseCoopers. The report, titled The Long View, How Will the Global Economic Order Change by 2050, says 7 rising economies will attain global economic predominance by 2050, with China leading the pack. John Hawksworth, PwC's chief economist, says he's optimistic regarding China's fiscal future and believes the country will continue to lead global economic growth in the long term.
Well, I mean, clearly China has been a huge economic success, and we think it will continue to grow relatively rapidly, and by 2030 will be the biggest economy in the world on any measure. So it will clearly come to play an increasingly leading role in the world economy. Well, I think in the short term, I think China could continue to grow at around 6 or 7%, similar to what it's done over the last year or two. I think that's a sustainable rate of growth. Obviously, it's not as fast as the 10% growth it was achieving a few years ago, but that's quite normal as the economy matures, as it rebalances itself towards domestic consumption. That's still, many times faster than most of the advanced Western economies that are only growing at about 2% a year. So China is still making progress relative to the US or Europe or Japan that are growing much more slowly.